Hi friends, in this video I want to speak about 3 micro cap stocks and I call them new age stocks because they have a very unique business model. And more importantly, their business model is very futuristic. Are these stocks likely to become multi-bagger, let's say 5 years down the line, 10 years down the line? I do not know that, but in this video, we'll dig deeper into each of the stocks. People who do not know me, my name is Rahul Jain and I'm a full-time investor. With that, let's get to stock number 1. So the first stock is eMudra Limited. Have a look at my screen and you will very quickly see that the market cap of this stock is around 7,000 crore and it is ranked at around 643. It's a micro cap stock. Now back in May 2022, the stock was trading at around 256 level. Now it has gone up to around 862 level, gaining almost 240% in the last 2 years or so time. What is driving this huge growth in the stock? I'll give you 5 to 6 hypercritical points in the next 5 minutes. Please do not skip. Listen to this commentary and you are going to learn a lot about this particular stock. First hypercritical point is the financial performance of this company. Have a look at my screen and you will see that the revenues have grown in the last 3 to 4 years at an average CAGR of around 41%. And later in this video, we are going to learn that this company is essentially selling IT products and IT services. Tell me how many IT product and services companies are growing at a 41% CAGR from a revenue perspective. There are hardly any. Also, if you look at their profit after tax, you will quickly notice that it has also grown at around 44% CAGR in the last 3 years. So very solid financial performance in the last 3 to 4 years is what we can clearly see here. Now, the natural question is that what is this company doing that is making this company grow at a 40% CAGR? So now comes hypercritical point number 2, which is their business model. So what you see on my screen is a written down business model, which is very complicated. Let me simplify in the next 30 seconds. So this company is acting as a certifying authority. That is number 1. And secondly, they are also operating with a zero trust. Let me now take an example of a bank. Just imagine a bank. And this bank wants to deal with so many stakeholders in their ecosystem. For example, their investors, their institutions, their many other stakeholders, and wants to have a digital identity because almost everything is now done digitally. And one of the most important parameter a bank want to make sure is in place is security of their systems. And this is where a company like eMudra Limited comes into picture. This is where they provide digital identity to many businesses. And more importantly, they do it in a very secure and safe manner. Okay, Rahul, understand that. But what are they actually selling? So have a look at my screen and you will see that they are selling 4 types of product. And if I go into detail of each of these products, it is going to be a dedicated video. Please pause it and watch it. And people who are from IT backgrounds will very easily understand it. But let me just take one of the products and give you a very high level view of what the company is doing. You might have used DocuSign as a platform to do digital signatures. DocuSign is a US based company. eMudra Limited also have very similar product called EM Signer, which helps companies implement digital signatures. Likewise, they have products such as Secure Online Access EMAS, which provides 2-factor authentication, single sign-on. These are the capabilities that every business nowadays need to be able to deal with their ecosystem digitally. So in my view, this is a very unique business model and it's a very futuristic business model as well. And I say this because you tell me how many companies do you know are operating in this sort of a segment? Let me know in the comments. Moving on to hypercritical point number 3, which is who are the customers and what is the sort of order book for this company. Have a look at my screen and you will see that 32% of their revenues are coming from government sector. Around 52% is coming from private sector, which is mainly the companies, and then remaining 16% are coming from banking and financial services. More importantly, 63% of their revenues are coming from existing customers because their products are given to them on a subscription based model. So there is a predictability of revenues when it comes to eMudra Limited. And point number 3 you will note here is their order book, and you will see very quickly that in the last 3 years the order book has been consistently growing up. This number is in millions. It is around 148 crores as of March 2024. So it's not a huge order book that the company has built. If you compare their revenues, I think the revenues, if I show you, in FY24 were around 373 crores. So it's not that they've got 3 times or 5 times of order book or a revenue visibility. But the point here is that the order book has been consistently growing, giving them a good revenue growth in the last 3 years. So far, if you're liking this video, hit the like button before I move to the next hypercritical point, which is about where the revenues are coming from. And if you see my screen, you will very quickly note there seems to be very strong growth coming from outside the India, because if you see FY23 versus FY24, you will very quickly realize that global revenues have gone up from 891 million rupees to 2047 million rupees, more than doubled here, while the revenues from Indian geography has gone up only from 1596 to 1684. We can clearly see a shift that their revenues are now growing from global perspective. If I talk about the ROE and ROCE numbers, very quickly you will see FY 2022 was the best year in terms of ROE and ROCE. FY 23 it came down, and in FY 24 the numbers have further come down, and the company says that this is mainly because of the IPO and also the QIP that the company did, which has increased the capital base, and therefore the ROE and ROCE numbers are looking very, very low. Next hypercritical point that we need to know about this company is that this company is heavily going into US market and have done 2 acquisitions in the last 2 years, one in 2023 and one very, very recently in 2024. And the reason I am sharing this point with you is that there is a lot of dependency that the company has now on the US business when it comes to growth of the business, and US elections are going to play an important role in terms of which governments come into power in US and what sort of volatility that induces in the stock market. And this is because when I was reading their earnings call, what the company is saying is that they are trying to get US government orders, and that is where the main opportunity for this company lies. Now coming to the last 2 critical points. Number 1 is the shareholding patterns, and very quickly you will see that the promoters have done some sort of selling from 61% back in June 2022. It has come down to 54%, and this pattern you will see with so many stocks right now because Indian markets are all-time high, and promoters are also using that as an opportunity to book their profits, which in my view is absolutely acceptable because not only they are promoters, they are also investors in the company. In terms of FIIs have taken 4.17% stake as of June 2024, while from a DI's perspective they seem to be buying this particular stock. As you can see, it is gone up from December 9.12% to 14.45% in March 2024. Now comes the last point, which is Bhav Bhagwan Chai, because if you see here in terms of valuation of this company, it is trading at a PE, extremely high PE of 98 versus industry PE of 37, while the PB is at around 11.29, while the industry is at 4.05. But very clearly you will see one thing here, that companies like KPIT Technology, which is also trading at a high PE of 74, there is something common between these 2 companies, that their profit growth in the last 3 years is very, very high, as you can see here in terms of some numbers here. Because when a company is producing very high profitability growth, then the market is likely to give them more attention and they really enjoy the premium in terms of the valuation. Also, if I look at eMudra Limited's median PE in the last 3 years, you will see median PE is at around 55, while the company is operating at around 91.5, which is extremely high. From a price to book value perspective also, median PB has been around 8.6, company is right now at 10.9. So in my view, it might be slightly overvalued right now, but this is mainly because of the revenue growth and the profitability growth we have seen in this particular company. I've shared a lot of details about eMudra Limited. Let me know what do you think about this company in the comments. I would love to read your comments. Also, please do not take this as a stock recommendation. Hopefully this has given you a lot of information to go and do some further analysis. And if you like this analysis, hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with such content for you at zero cost. You can also consider subscribing to my YouTube member community, because I post a lot of detailed analysis on my YouTube member community almost on a daily basis, and that will help you improve your investing approach. Give it a go only for 1 month and see if that helps you or not. With that, let's move to stock number 2. Stock number 2 is RateGain Travel Technologies Limited. Have a look at my screen and you will see that the stock's market cap is around 10,000 crores and the stock is ranking at around 537. It's a micro cap stock trying to become a small cap stock. But more importantly, the stock used to trade at around 340 level back in December 2021. Now it is trading at around 844 level, gone up by around 144%. So Rahul, tell us what is so special about this company that you've included in this video. Here are a few hypercritical points that you need to know about this company. Point number 1 is, have a look at my screen and you will see the revenues of this company in the last 3 years have grown at around 56% CAGR, which is very, very high. And second, even more important KPI you will see is the cash generation that the company has done. It has gone up from around 20 crores back in 2021 to around 151 crores, because these numbers are in millions. I'm converting them into crores. So again, it has gone from 20 crores back in 2021 to around 151 crores, giving around 94% CAGR. Also, you will very quickly see from the price chart that the majority of this rally that has come in FY 2024. What has caused this rally in FY 24? If you look at the revenues, they have grown up by around 69% in FY 24. And if you look at the profit after tax, it has grown up by around 112% last year. How many companies do we know that are growing their PAT by 112% in last 1 year? Very few. Let me know in the comments if you know any companies. I would like to go and analyze those companies for you. These are the high profitable companies and we definitely need to add them into our watch list. Second hypercritical point about this company is that their balance sheet, if we closely look, their borrowings are zero. More importantly, their cash and cash equivalent is huge. They have gone from 99 crores to 267 crores in FY 2024. So it's a cash rich company. Every year they are churning a lot of cash. What are they doing with this cash? We'll talk about that very quickly towards the end of this stock analysis. But for now, let's move to hypercritical point number 3, which is that their majority of revenues are coming from subscription model. And that is a key point we need to understand, because that brings the predictability in the revenues. So if you see here in FY24, 90% of their revenues were retained. This is important point. You really need to understand that they are not relying on acquiring new customers. Even if they don't acquire new customers, their existing customers are likely to continue to give them up to 90% of their revenues. Also, if you look at the second critical point here, which is their ratio of lifetime value, which is LTV, divided by CAC, which is the customer acquisition cost, important parameter for companies that are relying on subscription model. That ratio is trading at around 14.1. Very simply, it means that if you are spending 1 rupee to acquire a customer, that customer is giving you 14 rupees throughout the lifetime that they are with you. And this ratio used to be 21 back in 2023. It has come down to 14, but again, it's still a very, very healthy number to look at. In terms of geographical spread, you will see it is a very well diversified, revenues coming from Asia Pacific, Europe, North America, and so on. Okay, Rahul, you have not even talked about what does this company do. So let me talk about that in the next 30 to 40 seconds. You will see that the company is the largest software as a service company, SaaS company, operating in the hospitality and the travel industry. So who are the typical customers for this company? This is hotel chains, for example, OTAs, which are the online travel agencies, car rental companies, airlines, and so on. So what do they offer to their customers? 3 main services you will see here: data as a service, DaaS, IT people will understand that very quickly, distribution, and MarTech, which is marketing using the technology. And you can see how their revenues are spread across these 3 verticals here: 32% from DaaS, 22% from distribution, and 45% from marketing tech. So let me give you example of each one of them. For example, DaaS here, which is, let's say they are delivering the data or insights to companies like Expedia. So if Expedia wants to know what are the rates that other competitors are using, RateGain is going to provide that insight and data to Expedia, and this is called data as a service. Second is simple distribution, which is essentially that hotels have got some inventory of the rooms, and then you've got online travel agencies needing the visibility of that inventory so that they can go and book more customers. So RateGain act as a distributor, taking the inventory from the hotel chains and giving it to the online travel agency to go and book. Simple distribution model. This is nothing rocket science here. It's a very, very simple model. And then comes marketing technology, which is simply using the technology like the social media to help hotels build their brand, get more bookings, engage their customers, and so on. 3 more hypercritical points about this company. Number 1 is that the company is projecting to grow at 26% CAGR in the next 3 years. They want to go from 1000 crores sort of revenue to 2000 crores sort of a revenue. Then comes the shareholding patterns. The promoters in this company holds around 48% of the stake. It has come down from 56% back in December 2021 to around 48% in June 2024. If you look at the FIIs here, some bit of selling has happened in the month of June, but still at 9.4%. From a DI's perspective, they have been buying the stock. It has gone up from 17% in March to around 21% in June. Now their managing director and CEO Bhanu Chopra holds around 48% stake in this company. The next point that you need to understand about this company is, because this company is generating a lot of cash and generating a lot of PAT every single year, what they are going to do is they are going to acquire a lot of businesses in the next few years, and this is where they're likely to build their product suites to go after more and more customers. Lastly, in terms of the valuation, if you go to screener, you're going to see some of their competitors such as Tata Elxsi, Coforge, and in my view, that's a very, very wrong comparison, because yes, they are a software as a service company, but the business model is completely different from these companies, and comparing with these companies may not make a lot of sense. Also, last point, if you see their price chart, you will see that back in around February 2024, stock had hit around 900 level. It has dropped to around 654 level. So highly volatile stock, because it's a micro cap stock. It has gone up to now 850. So a lot of volatility is what you will see here. So it's not definitely for those investors who have got weak heart, because there is a lot of volatility here. In terms of the PE ratio of this company, median PE has been around 75. Right now it is trading at around 68. From a price to book value perspective, if you look at median PB has been around 6.2. Right now it is trading at around 6.9. Again, I've given you a lot of details about this particular stock. Please go ahead and do some of your research and do not take this as a recommendation. With that, let's move to stock number 3. The third stock that I want to cover in the next 2 to 3 minutes is a company called Ixigo. It's an online online travel agency, OTA, or a travel portal. Just last month, they came up with their IPO at an issue price of 93 rupees, and the stock opened at 48% premium at a price of 138 rupees. It closed at 20% premium at the end of the day. Right now, the stock is trading at around 175 rupees level, and if you see, the company is having a market cap of around 7,000 crore, 6,800 crore here, and ranked at 668, which is a micro cap stock. Now, just 2 to 3 hypercritical points about this particular company. Have a look at my screen. First point is the revenue growth. You will see the gross revenue, which is the total bookings that they get, has grown at around 35% CAGR in the last 3 years. If you look at the revenues from operations, which is grown at around 32% CAGR in the last 3 years. And if you look at the contribution margin, an extremely important concept that you need to understand, and this contribution margin has grown up by around 55% CAGR in the last 3 years. So what is the contribution margin? This basically means that if you removed and keep the fixed cost to one side, what are the fixed costs? Basically, the cost to build the travel platform is one-time cost. Let's remove it to one side and talk about how much of profit the company is generating through the operations. And that number in FY24 is around 44.8%, meaning that if the company is generating 100 rupees of revenues, and out of this 100 rupees, 44 rupees is the profit if you remove all the variable costs, such as the operation cost. And if you note, back in FY22, it was 32%. It has gone up to 44% in FY 2024, which is a very, very healthy sign that they are getting operationally leaner here. And this tells me that as more and more volume is coming into their platform, their contribution margin is growing up, which is that they're becoming operationally leaner. If I talk about the adjusted EBITDA of this company, it has grown at around 198% CAGR in the last 3 years. Now, the IPO of the Ixigo came just last month. I don't know how many of you applied for this IPO and how many of you got the allotment. Let me know in the comments if you got it. But more importantly, the point is that this company was profitable back in FY23. You can see 23 crores of profit, as well as in FY24. You can see 73 crores of profit, which is very, very different from what many other new age stocks like Zomato, Delivery, and etc. have done, where they were still making losses when they came up with the IPO. This company here is already making PAT positive in the last 2 years, while the IPO came in June 2024. Next hypercritical point is, where does this company stand in the market? So if you look at what the company claims is, number 1, travel portal from a train booking perspective, number 2, travel portal from a bus booking perspective, and number 5 from a flight ticket booking perspective. So how is this travel platform different from many other travel platforms? One of the key points that we need to note is that the company is using generative AI for their platforms. For example, their Ixigo Plan platform, which is a generative AI trip planner, was launched in mid 2023, and what it really does is that it takes input from the customer. For example, what sort of budget they have, what sort of destination they want to go, what sort of weather conditions they want, and all that, and it generates suggestions in terms of the itineraries. Secondly, recently using the technology, they have gone live with their Google Wallet, where the boarding pass will go directly sit in the Google Wallet. It was already done for Apple phone. So my point is that they're using a lot of technology to make things digital, make things more convenient for the customers. Thirdly, they're also developing some AI bots so that all the customer supports can be handled by the technology rather than putting the manpower to deal with the customer queries. And in my view, use of technology and use of AI is helping the company stand different from their competitors. Now, if you look at the valuation of this company, the company is trading at a very high PE of 156, while the industry is at around 69. And the immediate question might be that, is this highly overvalued? Yes, maybe highly overvalued, but please remember the IPO only came last month. There is going to be a time period where the price discovery need to happen in my view. But if you compare this with, let's say, Easy Trip Planner, their PE is at only 48 versus industry PE of 69. But please note that the profit growth the Easy Trip Planner has done in the last 3 years is only 35% versus what Ixigo has done, which is around 82%. So again, the premium in terms of the valuation the company is enjoying because of the high profit growth. So in my view, stocks like Ixigo, you really need to wait for price discoveries to happen. And when the valuations have come down, that may be the right time to sort of invest in such companies. But again, please do not take this as a recommendation. I've given you a lot of details about this company. Go and do further analysis. And more importantly, let the price discovery of this particular stock happen. So in this video, I spoke about 3 micro cap stocks and gave you a lot of details. Let me know what is your view out of these 3, which company has got a very bright future and have a potential to become multi-bagger stock. With that, I'll see you in my next video. Until then, keep rocking.